What impact will the newly implemented mortgage stress test on June 1st have on home buyers? Hi everyone, my name is Priscilla and I'm a real estate broker in GTA. Today, we are fortunate to have Boyi Leung, a mobile mortgage specialist of BMO, to share with us the impact of the new mortgage stress test on everyone.
Hello.
Boyi, could you please enlighten us on how should buyers approach this new mortgage stress test when making their home purchase?
Banks used to test home buyers' mortgage stress by assessing their ability to afford mortgage payment if the interest rate was 4.79%. But starting from June 1st, this testing interest rate raised to 5.25%. This translates to roughly $30,000 to $40,000 reduction in average affordability of the home buyers.
Boyi, you just mentioned the interest rate. You said 4.79% and 5.25%. Does it mean that we must borrow at an interest rate of 4.79 or 5.25%?
No, the current mortgage interest rate is between 1.5% to 2%. The mentioned interest rates are what the bank uses to assess buyers' loan limit. When the stress test interest rate was 4.79%, buyers can roughly loan out 5 times their income. With the new stress test interest rate, buyers can now only loan out 4.5 times their income.
I understand. Then, Boyi, I would like to ask, what is the purpose behind this mortgage stress test?
The purpose behind this policy is to ensure home buyers would still be able to afford mortgage payments if there are some fluctuations in the market.
Can I interpret it as, although we are currently at a very low interest rate level in history, the government wants to ensure that borrowers will still be able to repay their loan even if the interest rate raises in the future. Having the stress test being conducted at a high interest gives borrowers flexibility against interest rate fluctuations.
Yes.
I understand. Boyi, here's my next question. In some markets, lenders will not take borrower's income into account if the borrower can put down a large down payment. Is this the same in Canada?
Our bank has a program called High Net Worth, in which bank assess borrower's loan limit based on your savings without considering borrower's income. But bank would still prefer that borrowers have at least some incomes. In most cases, Canadian banks will look at both down payment and income of the borrower.
I see. Can I interpret it even if I have enough savings for 35% down payment, there is still a chance I won't be able to loan out the remaining 65% if my income isn't high enough?
Yes, it can be understood that way.
Okay, so having down payment does not guarantee banks will lend you money.
Yes, that's right.
Okay, understand. What are some additional factors other than income that the bank considers when lending?
Banks will also evaluate your credit score. If you are a new immigrant and does not have an established credit score in Canada, then they are likely to assess your credit score at your country of origin.
Understood. This means that even if I am a new immigrant and temporarily unemployed, I don't need to worry too much about getting a mortgage since Canadian financial institutions can also assess my credit score at my home country.
Yes, exactly.
Okay, I think this is exciting news for many new immigrants, international students, and people that are here on work permits. When I just arrived in Canada, I didn't have a credit score or high income, but I was still able to get a loan.
That's right.
Thank you very much, Boyi.